Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Thursday, the 2nd of June. Starting off with the FTSE 100, and at least for yesterday, the index played ball, bouncing off the uptrend line from February. 6150 was the notional support area, 6300 top of the range so far for May and going into June. So really waiting for either for a break of that range or to trade that range, 6150, 6300 over the next few sessions. Interestingly, the RSI has now fallen below neutral 50, 49.39, so that does hint at a break to the downside if there is going to be one over the next few sessions. On to the DAX, and picture here is that sort of similar to the FTSE, really. We're looking for support to come in towards the 200-day moving average and the uptrend line from the beginning of the year. That's around 10,100. That's held so far. Top of the range at the moment, around 10,365, and the message at the moment, either to trade that range or wait for a break outside it. RSI still well above 50 at 55, so that hints that the next move here will be up rather than down, obviously in contrast to the FTSE. But probably cautious traders now, given the recent pullback, would be looking to wait for an end of day close above the 10,365 level before going long again. Onto the US markets, and steadying a little bit for yesterday's session around the 50-day moving average for the Dow. That's at 17,744. So that's better news. Also bouncing off the 10-day moving average area as well towards 10,700. RSI at 53, so that gives us a positive slant on the price action. Really, we're looking to break the key reversal day down from the beginning of the week. Resistance there towards 17,900. Really want to see an end of day close above that before we can target towards up to the 19,000 zone, which would be the top of that trend channel I have drawn there on the daily chart. Onto the S&P, and looking a little brighter, let's say, than the Dow, in the sense that hardly any pullback after the break above the 50-day moving average of 2068. That's now notional support at the bottom of this February price channel. Upside here towards 2200, which could be achieved as soon as the end of next month. But as is obvious here, that the S&P has a rather stronger technical picture, let's say, than the Dow or the European indices, and one wonders which will lead here, the bearish ones or the bullish. Onto the Nasdaq, and this is still feeling the benefit of Warren Buffett's intervention with Apple. All the near-term moving averages looking either flat or rising, which is providing a positive momentum here, or the impression of positive momentum, at least while we're above the 50-day moving average at 44.38. The upside to the top of that rising February price channel at 4,800 seems to be on the cards. RSI 63, so this market rather hotter than the non-tech indices we have been looking at. On to the currencies, and cable still trying to stabilize after the Brexit scare to start the week. The key reversal to the downside, and that more positive pull for the levers, but finding support here at the 50-day moving average quite well so far at 144.07, and at least while we're above that, then one would have thought that the trading range between current levels and up to 147 will remain in place. At this stage, only back below the floor of that rising January trend channel. 143 really upsets the buy on dips scenario. The only other point to note is the way that this uptrend line in the RSI window has been broken, and that could be a leading indicator on downside, maybe later this week or going into next week. For the euro, better picture, really managed to save itself essentially at the 200-day moving average. That's at 110.95, and bounced off that over a few sessions towards the end of last month. I was looking for an end of day close above the 10-day moving average at 111.68 currently as the buy trigger. That was achieved for yesterday, and so a little run up towards the 50-day moving average at 113.07 could be possible over the next few sessions. Dollar yen, Still struggling to hold the 110 zone and the 50-day moving average. That's at 109.63, and we're really well below that. We're on alert for a fresh retest of the sub 106 May support. End of day close today below the 20-day average, 109.48 would, I think, be a good enough signal really to start targeting the lower levels for this cross. Finishing off with gold, and here it's still trying to consolidate. 12.08 was the low in March, the intraday low. We've had a low 11.99 for May, and holding above that 12.08 level so far for June, which is encouraging, but probably want to see an end of day close above the 10-day average at 12.23 to cancel or postpone a further breakdown towards the 200-day moving average at 11.64. That's it for me. More updates at the same time tomorrow.